Hey, good morning. Anyways, good to see you. Camera's a little weird today. I guess that's better. So anyways, good morning. It's a Monday. It's the Monday of the last trading week of 2018. It's been good. It's been bad. It's been great at times, and then it took it all back soon after. Oh, what a year, 2018. What a year. It's all right. So anyways, let's finish this up. Let's put a big red bow on it, and let's make some history. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. And hello, let me introduce myself. My name is Wayne McDonald. I am a currency trader just like you, except I've been doing this probably for longer. About 15 years, I guess it is, 13, 14, 15. It all depends when you say the start began. But anyways, I've been following the foreign exchange market for a very, 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 very long time, doing webinars for 13 or 14 of those years. Anyways, what is the raison d'etre? Why do we get together like this? Well, I do want to share my experience with you, share my trading techniques. What is that? Basic fundamental analysis, basic technical analysis, sharing the things that I've learned. I don't know, how do you say it, like psychologically, things like patience and discipline, and putting it all together so we could see a little bit around the corner and prepare for things like the great Japanese yen strength that's coming in the next bit. So anyways, why is that? Well, working with Trader's Way, I have been charged with the duty of helping you become a success. That's simply it. Trader's Way wants you to become a success. And it really is a symbiotic relationship. If you fund a live trading account at Trader's Way, the longer you trade and the more that you succeed, the more it'll benefit them because they're in the business of providing services like execution speed, customer service, and all that for competitive fees. So if you succeed, they succeed. That's it. So they said, Wayne, help our clients succeed. And I say, I will. So if you are benefiting from these webinars, would you please consider visiting tradersway.com and opening an account? Right now, if you're just going to start with a demo, that's a start. Let's develop a long-term business relationship together, huh? And without further ado, let's get on with it, huh? Where am I going to go? Let's go here. Hoodoo, Wayne, you've helped me a lot, and I am a prophet since I followed you. Thank you. Never keep it. Right. Well, right on. Thank you very much. Let me say, I've known some of you guys for more than a decade, some of you for a few years, and some of you are brand new. I do appreciate the respect you show me every day. I do respect our relationship. I do respect your feedback, and I take it very seriously. And so thank you very much for being in my life. I'm glad at times it's helpful. Okay, so let's get into it. We left the last webinar last week on Friday. We were at trading this EURUSD on a 1-minute chart. Is that right? Is that where we left, or was that the swing trading group? I don't think we would have done it on a 1-minute chart on a swing trading group. It was 1 minute, right? And we had this thing where it was moving down and you could you could be a bear, but you're selling way late in the process, way after the fact, reacting to the news, right? I said, well, there are little scalpy trade plans here. And I think I even showed you where a bear would sell, then where it bounced, and then where a bear would sell again. And then we got down to this level. And if you recall, on a 1 minute chart, I drew 3 little lines and I said, that's the line in the sand. That's where it will stop. How many people would agree with that assessment? Because that was quite a while ago. If I didn't get it quite right, let me know. Is that exactly what happened? Relatively? Sorta? Not at all? Because if you don't remember it, it never happened, right? Okay. And the period that we're talking about now is a 1 minute chart here. Okay, right? And I just want to point out, like, most of what we do in these webinars is pretty strategic, because most often what's happening in the next hour, especially on a 1 minute chart or a 5 minute chart, not only can not much or nothing at all happen over the course of an hour, even on a small time frame, unless you're trading at very specific prices, even the 1 minute chart is irrelevant. See, a lot of people just trade the 1 minute chart and they're here, and then down, here. And it gets mediocre because, to me, everything still has to set up on a 4-hour chart. So you have to be at the right place at the right time and then drop into a 1 minute chart. And we were kind of there, and I tried to squeeze in a lesson. But I'm showing you that, yes, we can trade a 4-hour chart and a 1 hour chart, but I'm actually showing you minute by minute when I can. And so we were way back here. I don't even know if I can go. I don't even know if it'll go back that far and fit that in. I don't think it will allow me. Oops. No wonder. All right. There it is. Okay. And now, what else did we talk about? Besides this being a bottom, does anyone remember the 1, 2, 3 setup? How would a bull tiptoe into this? We were talking about how bulls tiptoeing back in way back here, right? So this was a sell based on this old support, right? This was a sell based on this old support. Well, what we had talked about was a bull knew there was actually 2 levels of support here, not 3. The third one's just the middle. We had one support here and one here. It was what was it? A weekly S2 and a monthly M2, I think, were these 2 lines, and the thing in the middle was just the thing in the middle. So then what we had discussed, and again we discussed it to the left, if bulls were truly in, see, the first part is profit taking. How does a bull get in? And you see this is 100% retracement of this move, so it can't be a retracement now. Then you look left, and that's probably going to be where the support is. So you see I drew a gray zone. So we're anticipating somewhere around here we would be buyers. If you were a bull already. Not we would be buyers, but anyways, right? Look at the beautiful price action stuff. Okay, see this? Drag across. Oh my God. And then now you're up here, drag it across, right? See this one? Drag it across. Okay. And then really, anything beyond this is, I don't know. I really don't know. That would be the end of the move. I really don't know. Okay. And that would have been here. Okay. All right, so let me plug this back. Bullish swing traders are buying in here. Bearish swing traders are selling in here. Okay. Yeah, NP says setting up for a big sell. Yeah, well, if you're a bear, your two trade plans would be look for a short here, look for a short here. Preferably the first one because it's less retracement back, right? And that'd be that. That's all. Pretty simple. If you're a bear, that's it. Okay. So let's tiptoe over to oil. It's crazy now, isn't it? Has anyone just thrown up their hands like, oy vey? Oil, huh? Just, what is this, week 4? And it doesn't look that amazing. But before I say anything, I want to remind you that in this period here, eventually, and I think it was probably last week, we were talking about the idea that swing trading is a form of trend trading. Or maybe that was the swing trading group. But anyways, I recently talked about that. And that, in particular with oil, you got to be careful. Like, this is a bullish zone for swing traders. Okay? If you were a buyer when the market opened, I mean, you couldn't have gotten a better price. But that assumes a trend. Because if someone says, are you a bull? Well, I'm assuming it's trending up, right? I suppose you can be a bull on the way down. But are you a bull on the market conditions? And you might be a bull in oil, but you might not be bullish in market conditions such as this, right? So you got to kind of rinse your trades a little bit and say, well, yeah, I'd like it to go up, but I think support really technically is here. And resistance is really technically up here and really up here based on this, right? So you could be a bull here. And pivot point theory and swing trading theory all say, yeah, you could, but maybe cut your lot size in half, huh? Okay. Does that make sense? You can be a bull. You could even have a bullish setup. But the thing that supersedes everything else are current market conditions. So if you're going to take it because it's a valid trade, it's just mediocre market, which could be even more dangerous than anything. If you take it, maybe mitigate your risk by maybe taking half the lot size or something. Okay. That's right, Victor. Gold and oil are the commodities. Okay. Speaking about gold, we had a trade ban. How long ago was it? Quite a way. It must be a full week now. Where the previous Monday, 7 days ago, we were here, and I said, well, it's a higher high, so we need to look left, create a zone of higher low. Okay, and here's plan B. Either way, they're higher lows. And if you're a bull on gold, you'd be looking for plan A or plan B. So far, it looks like plan A has a pretty decent chance of moving. Plan A looks like it might be the better one. Chuck says oil traders are probably already on vacation. Well, let's comment on that for a bit. This is the last trading week. So if anyone is short on hitting their targets for trading, they're going to want to do it. They're going to want to trade. Lastly, the big thing that everyone is waiting for is the Fed announcement on Wednesday. We all know they're going to raise interest rates. I think I've shown you that what is it, a 99% chance based on the Fed Watch tool. Again, the Fed Watch tool looks at the pricing differentials of short-term contracts in the money market, and from the pricing, because they're so short-term dated that you don't really calculate cash flows from cash payments, right? They're essentially, you buy $100 for $99.02. So based on how much there's a discount in the money market, and the money market is loans being made from one ginormous bank or financial institution to another big ginormous financial institution. So these are professionals. They're based on future interest rate expectations. They're pricing in these contracts. So based on the price, you can figure out through reverse engineering and a nice little formula that's up there, you can figure out what that future expectation interest rate is, and from that derive the percentage of the market that believes the interest rates will be higher, lower, or the same. Long story short, like 100% chance the Fed's raising interest rates according to the smartest minds in the market. So, but the thing is, on Wednesday, we'll find out how many more, because remember Powell, he calmed everybody down and said, look, we're not going to raise interest rates nearly as much as you think we're going to. And I think in a matter of 2 weeks, again, using the Fed funds, the Fed funds market, the Fed funds futures market, we calculated that, like, was it the May contract? Right? But anyways, we looked at the future markets, and it was clear in less than 2 weeks, we went from 4 rate hikes in 2019 to 1 hike in 2 weeks. Radical change. So we need sort of confirmation from Powell. Is it 1 or is it 2? Is it 1 or is it 2? Okay, so that's what Wednesday's all about. And that can affect things like the oil market. It could. It might be the thing holding us back. Don't really know. So that's on Wednesday, but we also have oil inventories on Wednesday. So oil might be interesting on Wednesday, don't you think? Yeah, someone asked, how do I prepare for a no rate hike scenario? That ain't going to happen. So central bankers use something called, well, not all central bankers, but a newer part of modern central banking methodology is forward guidance, similar to like the dot plots and all that kind of stuff, right? This is all a form of the central bank trying to communicate what they're thinking and what they're probably going to do. Because if they don't, they could crash the market. Like $1 trillion goes away because Powell says something. Okay? Now, if you go back 25 years ago, central banking communique was quite different. Like if you go all the way back to Volcker, for example, Paul Volcker, around his time, he would, I think, only testify like twice a year to Congress and the Senate, right? He'd only testify twice a year, and when he spoke, you had no idea what the heck he said. It was very opaque. Think of the opposite of transparency. They tried to hide what they were doing. The only way you knew the Fed raised interest rates or lowered interest rates, suddenly the bond market would spike or crash. And they're like, oh my God, the Fed just jumped in, right? And it would just change everything, and it would freak everybody out, and you had no idea when it was going to happen. So anyways, we found that that's actually not a really good thing for business, right? Uncertainty. So long story short, the Fed, it uses a more modern methodology for communicating. We have all these meetings and all these things and all these testimonies and, press conferences. Even press conferences is a new thing. If you've been around for like 5 years, you think press conferences and all these Fed meetings is normal. Well, I've been around a lot longer than that. Press conferences are radical, man. For them to just come out and tell you what they're doing. So going back to the question, how do you prepare for the Fed not raising interest rates on Wednesday? That ain't going to happen. So the Fed has already told everybody what they're going to do, one way or the other. They go out and speaking conferences, and they write papers, and they're doing interviews with the press. They've already communicated. Okay? If they felt the future expectations, so now I'm talking like March or May, are off, then the Fed will come out and communicate the best they can to say, well, we haven't made the decision to raise interest rates in March or in May or June. Actually, it's a June meeting, right? We haven't made a decision to raise interest rates in June, and you're pricing it all in, and yeah, we might, but we're looking at some of the data, and there's some concerns here, like there's a pretty decent chance we won't. For example, we're just trying to get to neutral. And we're pretty close to neutral if you look at if you look at this and you look at that, we're pretty close. So we might not need a June rate. So anyways, so it all comes down to we're not worried about Wednesday. We're worried about June. That's the professional world, and that's where I'm trying to get you. Okay? That's where I'm trying to get you guys. What Wednesday is irrelevant. That's already passed. The thing this Wednesday, we traded that months ago, right? So anyways, even if you're joking now that you say you're joking, even if you're joking, it's an interesting 2-minute conversation. So yeah, it's already done. So we're using macroeconomics to think about the near future, and 6 months being the near future. Okay. Hey, by the way, would you guys give me the old thumbs up on the YouTube video? Oh, and the download link to my chart templates, that's in the video description. Feel free to do that. Okay. So that's gold. That's oil. Okay. I guess I should zoom in here. So this is looking pretty good now, considering we planned this out a week ago. This is a nice entry. Okay, this right here is the weekly bullish swing. Isn't that neat? It's only like we missed it by like the perfect entry. This one, well, this was an arrow. This was an arrow back on Thursday, if you guys recall, right? I had a little arrow down here. I think that's what this is. This entry here. The perfect entry was like 1 penny away. Michael, no, you know what? I'll do that today, Michael. I'll do that today, Mikey. Yeah, I got things to do. Update OCO download file. Okay. It might just be easier to update the file, but then just email everybody. So I might do that as well. Yeah, Bill Forner says, with the U.S. now a major exporter in oil, will that affect prices? Nobody. Well, that is the deal. That's what's going on. In fact, that's what's been going on for a few years. Where was the big one? So this move here really had a lot to do with that. Okay. Some of it was already coming online. Devon Oil had invented, if you will, horizontal fracking and such. Okay. I mean, look how crazy the prices were, right? Oh, wait. I grabbed the wrong one. No wonder I couldn't find the right move. All right, here we go. Right? So that a lot of this is to do with that. This isn't the 2008 move. This is the 2011 move. Okay, in 2008, oil prices came down very significantly. And then they went back up. But when they came down, entrepreneurs said, how can we get more oil out of the ground? And someone said, well, why don't you do it this way? And right, and then they do some things. I don't need to get into fracking, but anyways, technology was improved because you either find more supply or you find new technology to access the supply you already have. Maybe the supply is deeper than normal, stuck in salt or other things and needs a different technology, or whatever. But someone invents a better way, a new technology, right? That's always really, in fact, when you're doing economics, in particular macroeconomics, you talk about technology as a factor, the alpha factor. It's not just the size and age of your labor force, but how skilled is the labor force and what technology is available to them. Are they the most skilled farmers in the world that are using hand plows? They don't even have a mule to till a field, and then someone else comes out, doesn't know anything about farming, but you give them a tractor and a bunch of equipment. Which one is better? Well, ideally, you get a really, really skilled, experienced farmer that has spent, his life on a farm. There's probably 5 generations of farmers, and he's super well trained, and he has the best combines and tractors in the world, and suddenly you got super productivity, right? So technology is a real important part of it, and this is a big move here after the fact. This is when the economy was doing well and oil came down. So that's the new story of now the United States went from the largest importer of foreign oil to a major exporter of domestic oil. And it never happened before. In fact, it was basically illegal, if not actually illegal, to export American oil internationally. Almost every drop, in fact, probably every drop went to the strategic reserve, which is part of, what is it, the EIA or the IEA? I always mix this one up. IEA, International Social, I guess it's IEA, is the counterpart to OPEC. So if you want to, should I do a quick history? I guess I should do a quick history. All the Western European countries and Americans and the Canadians and the Dutch and everybody, they all went into the Middle East and raped and pillaged everybody and treated the locals with disrespect and totally took advantage of everybody. But that kept oil prices low, and that fueled the boom of the Western world. So all of a sudden places like New York City and Chicago and Paris and London just exploded into the capitals of the world. Well, they were being fueled by cheap, underpriced energy. So everything was fantastic. But everyone in the Middle East was pretty miserable because they were treated very, very poorly. So anyways, to the point where the Western world was warned and warned and warned and warned, we need to renegotiate our relationship. This is not going well. You're not treating us with respect. You're raping and pillaging our people. And of course, the rapers and pillagers are very poor listeners, so no one heard anything. So after pleading, finally, the oil-producing countries got together and created a cartel and said, screw you, Western world. We're going to cut your oil off. And we got to that point where oil was weaponized, and all that cheap oil that fueled the growth of the Western world suddenly was taken away. And by the way, previous global wars were all about very similar things. So anyway, once that was created and freaked the Western world out, the Western world had to say, wow, we need to create our own OPEC. And so they created their own OPEC. And part of that was all the members of OPEC, Canada, the United States, the UK, blah, 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 blah. They all said, everyone will have their own strategic petroleum reserve, right? Your SPR. So they have all these SPRs. And they said, well, if OPEC cuts us off and weaponizes oil again, we'll have this pool of strategic petroleum reserves, which will help us prevent sort of an immediate exogenous shock to our economies, and we'll be able to survive at least, a while, a few months before everything crashes. So we have a few months to figure things out, which is another way of saying you get your bombers out and, we go to war. So anyways, that's what that's all about. So for the longest time, if the USA, all their oil went to the SPR, which wasn't a lot of oil based on how much they were importing from places like Saudi Arabia. Well, we still import an amazing amount of oil from Saudi Arabia, but more from Canada, and, some from the other places like Venezuela. The United States is the only place in the world that refines Venezuelan oil. Well, that's interesting. So, all of this kind of makes sense. Where does Saudi Arabia get their gasoline? From America. That sounds logical, right? There's no refineries in Saudi Arabia? Really? That's weird. So anyways, there's this whole relationship of balance. And for the first time, the United States started exporting oil into the global market, and WTI floods the world market and the price drops. So now we're trying to figure it out. Okay? Now, some people say this was Saudi Arabia punishing us punishing the U.S. because of their fracking. And at $35 a barrel, frackers lose money and that's going to kill them. Saudi Arabia produces oil for less than $10 a barrel. Did you know that? Lots of Saudi Arabian oil, its largest input cost is the cost of the barrel. Not all of it, but a lot of it. And even in Canada, I know that that's kind of true. I think it was $13 a barrel that Lloydminster is pumping oil out. And it's been there for 50 or 60 years, and it's still just pumping oil. Everything's been paid for 30, 40, 50, 60 years ago. It's just one guy sitting pressing a button. In fact, the guy just sits there. Everything's automated, right? And he's just sitting there. And if the place catches fire, he goes, "Oh no," and he presses a button. So, it's cheap when it's automated like that. So the problem is Saudi Arabia isn't necessarily the most entrepreneurial place in the world. And what they forgot is, the Western world entrepreneurialism, which I think is a huge, blessing of human nature, and it should be harnessed, because when you drop to $35 a barrel, entrepreneurs find a way to get their costs down to $35. If it wasn't that, if it only dropped to $50, we'd be talking about $50 being the floor. But because it dropped so low, I think we're even below $50 now. We're more like $45, and it's going to go lower and lower because that's the power of entrepreneurialism. We will find a way to refine, to get better, smooth the process, streamline the process, make it easier, more efficient, and then thereby cheaper. Every time you double production, the cost drops by 30%. So that's the power of the human spirit if you're an entrepreneur. So anyways, that's kind of where we're going. The reason this dropped is the fact that the United States went from an exporter. They were not an exporter. I was going to say net exporter, but I don't think that's actually true. So I got to be careful with the language. I think the United States still imports an unbelievable amount. Like I was going to say a boatload, but actually lots of boats, a lot of boatloads, but they import an amazing amount. But they're also now producing enough to fill their strategic petroleum reserve, their SPR. They can fill that and then have lots left over. So now they're selling that or offsetting what they're buying, right? So anyways, it's a very interesting thing. If you want to know more about that, I mean, I've read 2 books that are more than 1,000 pages each on the subject, but there's a new book out called Saudi America. I think it's a small book, like maybe 100 pages, maybe 150 pages, and you get a sense of fracking. You're going to learn all about fracking and Chesapeake Oil and all the big oil companies in the United States and the scramble for fields and exploration and its effects on the international markets and stuff. You might want to look into that if you want a quick read over the holidays. By the way, Chuck Duck says gas is cheaper and all. Well, anyways, I saw gasoline. I don't know what price you're paying, but $1.96 a gallon here in the United States for the cheap gas. But still, it was up on the sign, $1.96. And I'll put it this way: 1 mile earlier, I saw a gasoline. I'm like, "Hey, look, son, gas $1.99." I said that, and he's like, "Is that good?" And I'm like, "Well, I haven't seen less than $2 in a very, very long time." He's like, "Oh, well, that's interesting." And then like 1 mile later, $1.96. Amazing. The book, Michael, it's called Saudi America. Okay. So by the way, if I wasn't a college student, I would start something called FX Book Club, and you should not look it up because I already built it years ago. I bought it many, many years ago. But I always had this idea where we'd get together and read books together. I still think it'd be interesting that I say, okay, January's book is Saudi America, for example. So everyone would buy it, read it, and then we'd come together and discuss it as a group and maybe smoke cigars and drink wine or something. But and maybe I even get the author to come in and talk with us and all that kind of stuff. I think it'd be interesting. But yeah, so, well, Gary, you're going to have to then convert it, right? So you're talking liters, right? 6.5, what, a liter? But in Seattle, it's 370 a gallon. Yeah. Yeah, well, but, there you go. There's lots of reasons for that, though, Ed. Makes sense. Nick says $3 a gallon, premium in New York. Yeah, well, depends on how you define premium. One of my gas stations here has 100 octane. You can put that in your airplane if you want. And it's for Ferraris and all that kind of stuff. Greg's got a $1.91 the other day in Texas. Okay, cool. Jim says gas more than doubled in the UK. I wonder if that's from the drop of the pound and having to import something like WTI to offset any shortages in Brent. That'd be interesting. I wasn't aware of that. $1.99 Michigan. Yeah. In the Detroit. Nice. All right, so anyways, very interesting. But could you see how it would be interesting if we got together as a group, we all read the same book at the same time, and then got together as a community and discussed it, maybe even had the author come in and stuff? But I never got around to doing it. Maybe in 2 years, huh? Yeah, why not? I always have something more important pending, but it's a good thought. All right, so yeah, nice little reversal, nice interesting setup for bears here. I don't know if any bears are going to take the shot, but that's where it lives. USD yen, not really interested. Aussie yen, yeah, you know what? I guess we can just go through all the Aussies. Lots of things ended last week at places that were not really exciting. And we are going into the end here, right? So. Yeah, well, Carlitos Reyes says the new president of Mexico is going to ramp up oil and all that. Yeah, cool. Right on. Well, more supply. And, that's really needed. I mean, there's a hidden story there, too, Carlos, where Mexico for a while was actually fairly, I wouldn't say rich, but economically, it was very stable, but I'm going back to like 1940s, 1950s, I think. And then somewhere in there, there was a change of government, and I don't remember which government. I mean, again, after reading all these books, it gets blurry. But Mexico had the best technology, they had good oil, and they had a lot of it. And Mexico started pumping it into the world market, and they were like Canada, basically, right? Like producing lots of good oil. But Canada had, and still does, a very robust economy. And Mexico, for some reason, somewhere along the line, said, let's go the way of Venezuela, and let's just focus on oil. And then as a government, let's rape and pillage the oil industry, force all the Europeans out. Let's get rid of the Dutch, and let's get rid of the English, and let's get rid of the Canadians and Americans, and let's kick all these guys out. Let's just rape and pillage all the money and not spend it on the people. And whatever we do, do not spend money on reinvestment ever. Do not maintain the equipment, right? And somewhere along there, it destroyed its own industry and then just kind of fizzled away. And I think a lot of that is led up to, I suppose, where we are today. I mean, how do you deal with like drug trafficking, and stuff, where Mexico was just in the way and inadvertently, became part of the drug trade, and therefore you're going to get war, gangs, and all that kind of stuff, and it got pretty ugly. So it'd be interesting both for Venezuela, but I guess even for Mexico, if they went back to investing into the industry, allowing foreign technology and really competition for themselves to put the technology in and extract the oil out and leave most of the benefits in Mexico. And there are lots of ways of doing it. Brazil, for example, negotiated when they brought oil companies into their country to say something like 80% of the downflow, not the pipeline itself, but like the logistical pipeline of drilling and moving oil. And you need to build oil lines, you need to build housing, you need to provide food, and all this stuff. All of that, 80% of that has to be, at least 80% of that support stuff has to be Brazilian, which makes a lot of sense. In other countries, they would just bring in Halliburton, and all the money would go to America and to Holland, and nothing would stay locally, right? And then lastly, of course, I hope the government reinvested it into society, the money that they make from this oil, that they reinvested into society, and maybe, support entrepreneurialism. That's what I would hope for anyways. Backwardization. Are you trading futures? Just imagine things like, there are normal things like you would normally think, Highlander, Mickey, you would normally think prices in the future would go up, right? And it's like, what if your normal market is the opposite of what normally happens? That's sort of that's backwardization, where I'm trying to think of an example, but what would be an example? What would we do? Wheat, wheat today is whatever. It's backwards. It's a pricing between futures contracts. First of all, the actual backwardization has probably happened like 10 times, less than 10 times in 20 years of watching the markets, right? So it's just a sign that whatever market you're trading, because I think each market is slightly different. And I'm not sure if my example was right of is it the future price is lower than the current one, or is it higher than the current one? But anyways, whatever, there's something seriously wrong with the market that you're trading, and prices are opposite of what you would expect. Okay, it's just a massive sign of something very strange happening in the market. Now, it's not backwardization, but I gave an example many years ago where I showed Brent price and WTI price were exactly the same. And I told everyone, I showed them, and I said, look, you will probably never see this again in your entire life. But here it is. WTI and Brent oil were both $68 on the same day. It might have been like $42 on the same day, but amazingly strange. Jim says June being more expensive than Dece. Yeah, I'm just wondering if that's always true. Like, because the thing with, for example, a futures price, like if you're delivering wheat, a physical wheat, you have to store it somewhere. And if you say, well, I don't want it until December, but it was harvested in September, well, then you have to put it in storage, and that actually costs money. You have to deliver it somewhere, then you have to put it in the warehouse, and that has to be maintained. And there's costs to all that, right? So what if you went through all of that and it was actually cheaper? Despite the carrying costs and all that, it was still cheaper than now. You're like, well, I could use it now, but apparently for some reason December is cheaper. So, it doesn't make sense that it would be that way, but sometimes it is that way. Because, for example, if there's so much wheat expected to come on the market in the future, then that would lower the price in the future versus what's now, because let's say there was an unusually late harvest, so there's a shortage of wheat now. So every company that makes bread or cereal, breakfast cereal, they need wheat now. They're like, give us wheat now. We have to have wheat. So wheat prices might be high now, but when they finally get the crops out of the field, there's going to be a flood of this stuff all at once. So if you can wait to December, you're going to pay half as much. That might be a backwardization, where typically if you have to store something for a few months and then have access to it, you have to pay for those costs too, and therefore the cost would be higher. So that kind of thing. But it's not, that backwardization is something specifically relevant to commodity futures trading. And by the way, if you take the Series 3 like I did 2005, I don't know, if you take the Series 3, those are the types of questions. For example, you'll see things like you're an elevator operator, and the current price of wheat is this, the future price of wheat is that, your costs are going to be this, and you want to hedge, and you're going to use options to do it. So then put together a strategy. But not really Forex. Okay, so anyways. Sorry that wasn't a very good answer. Okay, Euro Yen, look, still sideways. What are you going to do, huh? Well, I think it was oil, this is very similar. This is the exact price you want to buy if you happen to be a bull, but there's no technical reason in the moment to be a bull. There might be a fundamental reason to be a bull, but there's no technical reason. But nonetheless, if you're at your charts at 5 p.m. New York time on Sunday, and you were here, this is a clear buy. And it's also clearly not a sell. It doesn't mean it's going to work, however, and that's the big risk. So if you are a bear or expect to be a bear soon, hint, hint, nudge, nudge, your actual trade plan probably looks like this right now. Okay? And you're probably thinking here. Okay? We're going to have this in here. So Wednesday is the Fed meeting. So I'm not sure what's going to happen Thursday or Friday. Maybe a lot as people desperately to try to make last minute trades, or maybe absolutely totally nothing at all. So that makes the Fed meeting unusually interesting because there might be a lot more last minute trading going on around that Fed meeting. Could be very interesting. Chuck, you were there back then when WTI and Brent were the same? Amazing. Well, so Ian says there's so much big news on the calendar, except for like Brexit stuff. I think everything is going to be overshadowed by the Fed meeting, mostly because it's a reserve currency. And we're trying to clarify this new idea that the Fed's only going to raise once in 2019, but maybe people misread Powell on that. Or here's really what works. Powell probably went into that, into his recent communique with the attitude that the market's pricing in 4 hikes in 2019. And he's like, you know what? I don't really intend to raise it 4 times. I only intend to raise it twice, is what his gut feeling is. They're still data dependent, but he's thinking, you know what? If we raise it by another 0.5 point, we will be neutral, right? Just look at CPI, right? What was CPI, 2.25? So really, you just got to get the Fed funds rate to 2.25-ish, right? So he's thinking, you know what? I need to tell the market they're wrong on the 4, okay? And get them to think 2. So then Powell goes out, makes his speeches, and the market goes, holy crap! It's not 4, it's only 1! And everything starts moving, and Powell's sitting there like, oh my God, they went from 4 to 1 just because I burped or winked my eye funny. You know, he got some dust in his eye and he's like this. And suddenly the market tanks, right? So he's like, oh man, now they're priced it at 1. So now he's got to come back out and say, well, look, 1 isn't quite enough because there's future inflation, so it will slowly grow. So I'm not thinking 2.25, I'm thinking 2.5, and so it's twice next year. And so he has to like re-educate the market again, right? And that's the whole thing about what the Fed's trying to do now. And like I said, 20 years ago, the exact opposite. 30 years ago, you only knew the Fed did something when you lost a crap load of money. Okay. Thank you, Andrew. Did you? Andrew just subscribed? Where, Andrew? I don't see. Did you? Just subscribe. Bobby subscribed. Kay subscribed. Jim has. But those. Did you? Anyways, I must have missed it. I don't see it here. Sorry, buddy. Maybe you're already subscribed and you accidentally unsubscribed. Anyways, thank you for subscribing. But interesting stuff, right? So again, I don't know if you've been trading for 20 years or not, but I'm here to share. How about this? Let's do a quick round, right? It's almost 8:30. Let's do a power round. I'm going to take requests from you guys, and I'm going to burn through them quick. So you give me a currency pair, I'll just jump into it, do the technical analysis, 1 minute or less, and then boom, on to the next one. Yeah, sorry, Alex, right? An unsubscribed one, right? Like, wah, wah, wah. Sorry. Okay, cool. So I'll start with USD Swiss franc. Let's go here. On the 4 hour, I'm going to switch the template to our standard one. Okay. Well, the first thing you have to analyze is whether you believe we're doing this or we're doing this. Okay, so that comes down to whether you're a bull or a bear, but that's going to be the thing that filters your decision. The current bottom of the market is an S1, which tells us this is an R1 market, R1 top, which is last month's high. So we're kind of stuck here, and we're following the line to the left. We're sort of in here. It's more supportive on the very, very short term, but this looks nearly dead. I'll zoom in a little bit. So we know going back even several months that this is support. Drop into a smaller time frame. So you can't sell here unless you like losing money. The next thing you could possibly do is something like this. Okay. By the way, this was very bearish. So bears have already sold this, and they did a good job, didn't they? This was the selling price for weekly swing traders. So again, Sunday afternoon at 5 p.m. New York time, anyone that wanted to sell this saw it and just couldn't believe how lucky they were to get the exact price they were hoping for. So they sold it hard. Some people are going to take profit here, and bears are going to probably try again around here. Okay. So to say that, again, bears are probably going to try a new short here, probably going to take some profit here. A bull is going to look for a dipsy-do. Okay. Okay. Don't type too much. I'm going through these requests. Pound kiwi. That's one of those ones I don't think I actually have, but we can do it. Don't type too much, guys. Don't type too much. Aussie kiwi, Aussie kiwi, Aussie kiwi. All right, here we go. Okay, uptrend or downtrend. Looks very down to me. Okay, this is an S1, R1 target. Okay, you're going to have to mark this as support. And a bullish move would be here or here. Okay, so therefore, not only should you mark this, you should mark this, but already have it marked. Okay, give it a couple clicks in. Okay, we've already got this marked up, so we've already done the work. This is already in here. Okay, we've opened out a position, so if you're a bull, you need to trade this future 21 EMA. And if you're a bear, if you're a bear, you're looking like this. All right? So bulls, you missed your opportunity back at the open. Okay? So I don't think you should be doing anything now at all. And bears are probably going to try to take this in. Okay? Does that make sense? Is that enough detail? Okay, you're entering bear territory. Bring your bear spray if you're a bull. Next. Euro Aussie. Euro Aussie. Swissy. No. Thought we have it here. Probably here. Euro Aussie. Okay, got it. Thank you for subscribing. Sherda. Mr. Singh. Thank you. Let's move there. Okay, let's take a look. Euro Aussie. Okay, once again, there was a bullish entry at the market open. Not much I can do for you if you don't trade at the market open. But anyways, so that was bullish. And it doesn't get any better than that, really. Now, what about the bears? The bears are definitely going to sell here. This is a whole plan A bear zone. Okay. They're definitely going to do that. Plan B for bears is going to be way up here, but this seems like nomad's land. I don't think anyone really wants that, but it is the next level. So like a bull might do this, and do this. So a bear would try something slightly different. A bear would either sell this or they would sell this. Okay. So the first opportunity is going to be a short one, not a long one, because the long one already happened 12 hours ago. Again, I don't get it. If you guys are not at the market open, and then you're like, Wayne, I'm not making money. When do I buy my yellow Lamborghini? And I'll say, well, are you trading Sunday afternoon at 5 p.m.? You're like, no, I got the football game to watch. Okay. Kiwi yen. I'm not going to do lira. I'm not going to do exotics. I'm not going to do rand or Polish zloty or anything. Thank you, Carlo. Thank you, Joshua. Welcome to the family, guys. All right, so let's go into here. Let's clean this up. Put some more time on it. All right. So do you want to continue being a bull, or do you want to continue, or do you want to try to turn this around? So it really comes down to, once again, bias. I do think yen pairs are going to drop. It doesn't have to be this week, but in the next 2 weeks, I think you're going to see a major drop happening. So this might be the last rally, for example, if you're a bull. That's cool. This is the buy zone if you're a bull, okay? And you saw that at the market open. So once again, you should have already bought this a long time ago. You're fortunate or maybe unfortunate that it hasn't moved yet, okay? Now, a bear needs it to rise and then drop. And because it hasn't risen, it might even be worse where it just floats down or sinks, I guess. Instead of heading up, it sinks down. In that case, that's an out of position move, and I would expect it to hit support early. So where's support, right? So support's here. So that, again, these dips this time of year really affect my attitude toward the changing of the guard, switching from a bull to a bear. Okay, so if you guys probably know, I've been a bull on these pairs since the 3rd week of August, right? Then I told you somewhere in December this is going to turn bearish, and by January we'll be super bears. Well, this I think constitutes somewhere in December, right? So do you start doing this now? Honestly, I don't know. I mean, that's your decision. This could go up one more. Wouldn't that be great? That'd be great. That just gets us to a new resistance. And then we make a lower high in January, we dump it. Great. Could happen now, could happen later, but that's why we use technical analysis. So if it's going to go up, technical analysis tells me it's supposed to stay above 77. Now, it could drop to 76.80 and then pop up. Don't cry me a river over something like this, right? But it's not supposed to be falling. It's supposed to be reversing here. And if this falls, like I said, then that changes my attitude where it's probably time to be a bear for the next 5 months. Okay. Am I going too fast, guys? Kiwi CAD. I don't think I did that one, did I? don't see the other one. Kiwi cat, huh? I'm just missing it here. There it is. Okay. Yeah, I mean, this is one of those trades where we hit our target for the month. So this is the projected high for the month. Okay, we knew that on the first day of the month, which was here. So if you bought it here, you hit this and you were done. Okay, you're done. You're done trading this. We hit our target long ago. So you're still trading it. If you're a bull, you have that is moderate support. Let me give it a couple extra clicks. Yeah. And then as a bear, you've already hit your target. So now your next one's going to, well, that doesn't help. Let's do it this way. So now your new thing is you're in a channel. Okay. And what? You're going to turn this over? See, I don't like it. I don't like either of these. If you're a bull, this was a fantastic place to buy. I mean, you're trading it like a bottom, but it's a monthly pivot. Okay, it's an MM3, but as support. Okay, not as resistance. But then it's a weekly M2, like I'm telling you, perfect weekly M2 at 151. And if anyone buys that, we're heading here probably to monthly R2. And this is really tricky because it's already played the bullish part out. It doesn't have to do this. And it can be bearish, but and what's moving it? Is it euro? Is it euro strength? Is it CAD weakness? I'm worried that this becomes fool's gold. Like, for example, if you bought it here at the weekly M2, and once again, you bought it at 5 p.m. Eastern time on Sunday, like you were supposed to, then you did your job and you caught a nice trade, and then might as well just let it run to target. I just move it to break even and forget about it. Like, just let it run, whatever. To do something now bullish seems almost impossible. Because the only way to do it is by a dip. So where's the dip? Off the target. But then once again, now you're buying after a triple top, which just sounds really bad. The flip side of all of that would be if you're a bear, if it rolls over here, you can take a shot. And if you're up here, you can take a shot. Okay. Okay, so it's kind of like that, right? But I don't want to sell a beautiful 4-hour candle like that either, right? So it's not ready and it seems dangerous. Now, if it wasn't for hitting the target already in the month, I'd feel a lot different than this, right? Like if I didn't know anything about pivot points. Okay, if all I had was this, how would I feel about it? Yeah, you would have this up, down, move into the moving averages and up, right? But based on what happened the previous month, we already said this is likely to be our top for the month of December. So then you're like, oh, snap. We did that. We went from there to there in the first, week. And then it dropped like a ton of bricks. Well, you're supposed to just believe that that was done. Okay. Yeah, no, Alex, they're just pivot points. Wyatt is an old student of mine at FX Bootcamp who then took my FX Bootcamp setups that I had on the Dealbook 360. which include pivot points. And then I used to have a custom indicator called Fibbits. Now, a Fibbit, I came up with this idea for my day trading strategy, in which I used a lot of Fibonacci. And then I realized, well, sometimes Fibonacci overlaps with pivot points, and sometimes it doesn't, but I wonder if it's important. And I kind of started to use it. And a Fibbit was Fibonacci, fib levels with pivot levels, right? So I called them Fibbits. And then so when MT4 came out, I didn't use MT4. I used the Dealbook 360. I was a big shot over at GFT. So that's what I used. And so Wyatt took my Fibbit and programmed it into MT4. So now that I use MT4, I use Wyatt's stuff. Yeah. I think I even have a picture with Wyatt somewhere from an old Forex conference. I think he entered a trading contest and won. But anyways, long time ago. But they're not different numbers. It's not like there's so many other versions of pivot points now. I wouldn't use any of those. It's just pivot points with Fibonacci. And then I believe in my use of them, I turn the Fibbits off. But you'll see language like Fibbits, and then you'll Google it, and you won't know what a Fibbit is. Well, it's something I created 1,000 years ago. They're Fibonacci levels with pivot levels. Yeah, you do. So do I. No, well, Michael. So I'm gonna, I'm starting a day trading group along with the swing trading group, and we're just calling it a group. So it's going to be swing trading and day trading. So it's all coming together. But yeah, there's different ways of doing it. Faux show. But yeah, I don't think you'll need to turn those on, but you could. Another one that I used to use a lot a couple of years ago, which I've turned on. I turned it on randomly just the other day. And what do I call it? Daily Intel. So I used to use this indicator a bit, where yesterday's low, yesterday's high. Why does it keep doing that? Maybe that's why I stopped using it. It keeps turning off. It highlights psychological levels and daily pivot points. Which I think is interesting, right? There's the daily central. Here's the daily open. So this is actually the Sunday low, right? And then there's the actual open, which you can see in the vertical line. I don't know if you can see that. Okay. Then I used to combine this with other things and all that kind of stuff. Yeah, Alex, there is a dump. I don't know where they came from. There's like a Camilla or something. I don't know what that is. Somebody selling a book, I guess. But I use what floor traders used. Okay. So a Fibbit was just something I created as a combination of Fibbits, of fib levels and pivot levels. Fibbit. But I don't use them anymore. But not directly, but I still use Fibonacci and I still use pivot points. So. All right, so I think we had a pretty good day. I hope you feel the same. Please subscribe so that tomorrow when I click the button, you join us. It brings you right in and says, hey, if you're available, swing on by. We're getting closer and closer and closer and closer and closer to Fed meeting on Wednesday. Maybe we should do a special get-together for that. Wouldn't that be interesting? So maybe I'll put something up onto YouTube and you could, I'll schedule it or something. What else is going on? Oh, wait. Yeah, well, I was going to say I have my last final examination on Wednesday, but I don't think I have to. No, I can take time off. Roger, you like the you like the Fibbits? Amazing balls, huh? Interesting. Yeah. Yeah. Well, Alex, you can do whatever you want. If it works, man. That's all. So, anyways, peace on earth. May the pips be with you. May your profits be above average. And if you wouldn't mind, would you do me a favor and visit tradersway.com, download an MT4 account from the demo, and give us an opportunity to earn your business. Would you do that for us? Without further ado, I will see you tomorrow. Thank you for subscribing. I'm amazeballs. I don't even know what that means, but it sounds awesome. Cool, guys. Again, thank you for the loyalty and respect you show me every day. I do appreciate it.